What kind of inroads has the market made, do you think, into the wealth sector in the last year or two?
Lots and not very much. All right. So lots in that it's a lot bigger than it was a couple of years ago. The number of players involved and the sort of product proliferation has all gone rapidly. Not very much because it's still relatively small. So if you look, I mean, the wealth, the amount of capital in that wealth market is very, very significant. It's, I don't know, 70 trillion, something like that is wealth, quote unquote. And we're scratching the surface still.
Yeah. Mm.
The vehicle of choice is the semi-liquid structure. There must be 40 now around the world. So and probably 2 years ago, there were 10. So there's huge growth in the vehicle archetype that is designed for this channel across multiple different strategies now. So there's the pure multi-strategy, there's secondaries, there's private equity, there's private credit, there's private real estate. So there's many, many more choices of vehicle and many, many more players playing at this.
What are your thoughts on a semi-liquid structure?
It's a bit Marmite. So people generally love it or hate it. There's not really much in the middle. I'm more of a lover. I think it's a pretty good solution, a pretty good tool. If it's the key thing is how it's positioned with the customer, because this is not liquid like a Diageo share. Okay, this is liquid with a small L, and you should think of it as sort of nuclear button liquid, right? There's a way out of this, but it ain't really day to day or even month to month. This should be seen. And again, it goes back to this point around in private markets, you really don't want to be pushing liquidity. You want the underlying to drive the liquidity, because then you benefit from the insider rather than you making that decision. So, you should think about it as a somewhat liquid structure that gives you exposure to this asset class, which is obviously done very well. And when you've positioned accordingly and that's been communicated effectively, I think it's a really good tool. The people that hate it are just worried about, I think, partly the way the way the customers have interpreted what it really is around the way liquidity works. Because of the liquidity, there's a mechanism for liquidity, which doesn't mean it's on demand.
Yes.
Right. And that is interesting because, when I, many moons ago, when I was a public market fund manager, let me tell you, public market liquidity is also not not there when you need it, particularly in smaller businesses. The price you see on the screen is no relation to what you would trade at. So, similarly with this, the liquidity is not perfect liquidity. It just doesn't exist. Really,
it's a communication thing, isn't it?
Yeah.
You might be better off calling it a mainly committed vehicle rather than a partially liquid one.
What's good about what is good is the NAV exposure, right? So that as opposed to, you pass money to a private equity fund, it takes you 5 years to get invested, and who knows what your net exposure is. The great things with these things is you're NAV based, so you're straight into NAV the moment you invest.
You've got to have a certain scale as a private equity manager to be able to access
to build
this.
Because of they're basically open-ended, like mutual funds, so you have to start from somewhere, and then it scales with flows. So you're hanging your shingle out every month going, this is open for flow. And you have to manage the flows into the vehicle carefully, because you don't want to crush the NAV with too much cash. So if you have too much flow in any month relative to the actual investment value, then you start to dilute the investment return because you've got too much cash. So it's a bit like there's like a pace you can go at, an equilibrium pace. And as you get bigger, you can take more money. You can grow faster as you get bigger because that equilibrium stays in place at scale. So the numbers get bigger.
And the more funds you got, the more you can allocate it out.
Yeah, well, the thing is, they're not really set up for funds, because funds,
do they not invest into funds though?
Only to a small extent.
So they're invested directly.
Yeah, this is the thing.
Right.
Because the problem is, like, the fund is, average life of private equity funds. 15 years average. Not good for liquid vehicles. Okay, so generally you want to be very, very thoughtful about the amount of long-term fund exposure you've got, because you haven't. It's difficult to underwrite the liquidity that comes out of that. So what typically you see is that these things sit below the deal funnels of very big deal machines. So, a private equity deal machine, a private credit deal machine, a secondary deal machine. And as deals go through the deal machine, then these vehicles are taking exposure from these deals as they pass. And I mean, the cadence is high. So I mean, you're because you're open ended every month, you're wanting to allocate to deals every month, and to do that, you need a lot of deals, right?
Yes.
So even credit is great because credit is like a fire hose of stuff that comes through it. So it's easy to do. Secondary PE is okay. I mean, there's lots of secondary transactions out there that happen. Depends how many you complete. The problem you have with secondary transactions is from you saying yes to actually the deal funding could be a long time.
Yeah.
Credit's much quicker. And then direct equity is sort of somewhere in the middle. So it's, there's a good flow, takes a bit longer to close, but depending on how you set your vehicle up, is it multi-strategy? Is it private equity? Is it private credit? Is it whatever? What is it? It's got to sit under a deal funnel, and then it's got to transact, or it's got to pick from that deal funnel on a pretty regular cadence, and that's what builds your vehicle.
Yeah.
So so far so good. So far so good. But as I said, some people find them a little more challenging, just around, we've not really seen a proper pressure test.
Yes.
And so some are more cautious. Some individuals are more cautious around wanting to see that. But I think they're here for good, and they're going to get a lot bigger.